Welcome back to another updated chart on the S&P 500. I'm going to do both the S&P 500 and the E-minis and E-mini micros. So we're going to start out analyzing the technical indicators that I have with it, and then finally end up with some overall wave counts. So in case you don't know, I count everything with Fibonacci sequencing and Elliott wave theory. The only difference is I don't count anything in 5 waves. I count everything in 3 waves as an ABC pattern. I believe that when Ralph Nelson Elliott made his debut with Elliott wave theory, he gave us something really great, with the patterns that he could find. But I think the corrections that he implemented make up the entire market structure. So, with that being said, there's 3 corrections I really try to emphasize, and here on my website that I'm building, I label the 3 corrections that are real important to look for, and it's a zigzag, triangles, and expanded flats. Here's an example of a triangle. Triangles are always counted in A, B, C, D, E, 5 swings. That's a standard rule for Elliott wave theory, so I haven't gone too far off the track with that. The next one here is a zigzag pattern in an ABC. So you'll have, and the internals are always 3 moves too. So 1, 2, 3 for A, 1, 2, 3 for B, and then 1, 2, 3 for C. And then the last one here is the all but most important expanded flat. These are the ones that really give you a turn in the market. So is what happens here is when your starting point with A, your B actually makes a lower low, and then the C leg makes a higher high. So this one's very important. Again, on the website, if you forget which patterns they are, you can just go to the moves in 3 waves. Here I've got a couple of rules and how each wave kind of moves, what to look for, some basic rules. But down here at the bottom are the diagrams. You just click on the diagrams, and it gives you the pattern that I've incorporated with it. But anyways, back to the updated analysis on the S&P 500. Let's start with the MACD here. Actually, let's start with the MACD 2 lines. That's these signal line and moving average line here. Now, both of them are below the 0 line, so this is a bearish trend. The gap kind of opened up a little bit more on Friday too. I think everybody kind of could feel that. So this is definitely bearish. Let's go to the RSI real quick. The RSI is anything below the 50 right here is a bearish sentiment. So we even tested it and got a pretty good rejection off of it. And just speaking of 3 waves, you can see 1, 2, 3 right here. So keep that in mind. That's going to be important later on. So bearish overall sentiment on the RSI. Now the MACD. This is a little. This one's different. We got a divergence going on. Okay, and I drew this little line here. Let me activate it again so you can see it. Here's my starting point, the lowest momentum bar. And you just want to try to catch the underbelly there of each of the lowest points, lowest swings. Okay, and so you can see how the momentum bars make higher lows, and then our chart makes, well, it's pretty much flat with the exception of a lower low on Friday, but we'll get back to that later. But the overall consensus is it's pretty flat on the swings. Here's a swing, and then the lower one on Friday. So usually with a divergence showing, that usually indicates a change in trend. So we'll come back and put all this together here in a second. So just mental note, change in direction on the MACD, but still very strong on the bearish side. RSI is on the bearish side, and the MACD 2 lines still bearish. Now, for those of you that like moving averages, let's take a look what I got here. This is the overall structure, chart structure on the S&P 500. I don't know if I said this one was the micro E-minis chart, so, but overall it's the same concept, same sentiment. Okay, so S&P 500 index, this is from your, right here is the January 22 high, and then the sell-off here. This is real important because this is what I'm basing this move up off of, but we'll come back to that. Let's zoom in this section here. So basically, like I said, let's just focus on the moving averages right now. I usually just kind of focus on the moving averages on a daily time frame. Anything else is kind of too far out in advance, or it's too short a time period to really weight any bearing on it. So right now, you want to look for crossovers and kind of the gap between the price action and the moving averages. I have 3 moving averages up. The green is for most people's case it's the 200, but for me I have 233, and then the 55-day moving averages, so the green one is the 233, the 55 is the solid, no, it's the dotted one, right? It's the dotted one. Yeah, the dotted yellow one is the 55, and the solid yellow one is the 9-day moving averages. So the 9-day I put up there because a lot of day traders use that for entries and exits. Okay, so it's always important to know other trading styles, so it helps you kind of determine what everybody else is thinking. But let's just state the obvious here right now. We are above the I'll just say 233. We're above it, so we're still overall bullish. Quite a distance from the 55, this dotted yellow moving average. Okay, and we've opened up a gap between the 9-day and the 55. Ignore these lines right now. I'll come back to them. I don't want to erase them because they're significant here in a second. I don't want to forget to put them back up. But so we're just focusing on the moving averages. Okay, so and you always want to try to project, have a mental projection of how it's going to close if it does. So it almost kind of looks like this the longer term trend starting to come to its bell curve, right? It almost looks like it's starting to curve right there, but with a couple of days under its belt, we'll know a little bit more. But I think the most to take away from these 2 moving averages is the gap between the 9 and the 55. You don't really see that kind of percentage of gap except maybe something like this, where we got a reversal. So now nothing concrete yet, because like I said, I put more emphasis on my 3 moves on my counts. So this is how I've got it labeled so far. This move down in July was our A move, okay, and our B move, which was a higher high, was back in this last month, into this last year, December 5th. And that should be the turn for this C leg down here. Now, just to emphasize some of these patterns, this A leg is a zigzag, A, B, and a C. So that is the same as this zigzag pattern here, A, B, and C, always has the same projection, symmetry. Usually you want to look for similarities like that, where the C leg kind of mirrors some kind of move, like as the A did. In this case, this was an extension, but I don't want to get into that right now. So anyways, this one A leg was a zigzag. Now this B leg was a triangle. And I have it labeled here, but I didn't label it yet. But you can see here, that's the A. This is the B. C here. This was actually a double zigzag. This is a zigzag here for D. And your E was up here right next to B. Okay? Which, when I analyze these charts, I look for things like this A leg. It was in 3 legs, or 3 moves. 1, 2, 3. The third leg was extended. It hit the 200%, the 261.8 fib here. So that was the extension. And you can tell for the C leg, when it had this double zigzag, the extended part was in the first leg. You can see this first leg is a lot bigger than the second leg. Okay, so that's an extension. And then the E leg had an extension in both legs, the first one and the second one. Okay, that just helps confirm, just trying to count my waves. Okay, another thing is a lot of people like to do is look at trend lines. So if you take the top of where the triangle completed and you draw it to the opening and the high and the low of the triangle on the A leg. So right here, that's the high, and then your low. Okay. Now, is what I like to get out of this is, usually I don't look at trend lines, but lately they've been more relevant. So notice the breakouts underneath the trend line. These are what's known would be a false breakout. Okay, this is going to be important later on when we break down this move here. So let's do that. Let's go start with this is the daily time frame too, by the way, if I hadn't said that. And I try to indicate lower degrees with different colors. Again, Elliott Wave labels them specifically, numerically, Roman numerals, uppercase, and not really so much color. But with the platform I use, it's the best way I can. It's just not really Elliott Wave friendly. Okay, so 4-hour time frame. All right, this is where we're focusing at the apex of that triangle here that we just drew these lines. Now, again, this is the 4-hour chart, so the moving averages moved a little bit different. Okay, and again, that's something to look at. I don't bear a lot of weight on it. I usually just try to count, but they do seem like they want to close a little bit more. They're a little tighter on the 4-hour. But anyways, let's get back to the labeling. So if this was our pivot here at 12/6/24, I drew another triangle in here real quick. So again, let's draw this trend line, the top of where E had completed, and we'll bring it right to the opening of A, top of A, bottom of A. Just want you to notice these false breakouts. It almost looks very similar to the bigger grand scheme of that other triangle we just measured, right? It does to me anyways. So anyways, this would be an A right here, an A move, your first leg. This is your B move, and this was your C move. So that was one move, A, B, C, and that is also a zigzag pattern, okay, with the triangle for the B. Now, on a lower degree, we label this in we're gonna do a light blue, I guess. Okay. So that's your A. B somewhere here. We don't know yet. Let me just write it down. And then we need a C. Okay, so somewhere down here, probably. Now, to measure with Fibonacci extensions. Well, no, retracement. I use the Fibonacci retracement tool only. This, I don't know if you can read that, but it says Fibonacci retracements. I use that for the extension. Okay, so don't get confused when I say extensions, because that's two different tools. So all I do to get a C leg, the C leg is measure. I start at the top of A and end at the bottom of A. Now, the market likes to hide patterns inside other patterns. So what I mean is, I measured this A leg, right? This zigzag pattern, and I've got a target of 58.1366, which it's pretty much right on the money. Okay, it's a little overlap. So that makes me wonder that we may not be complete, because usually these fibs are spot on. Okay, I bear a lot of emphasis on these fibs. That's what it's all about. Okay, this tells you that you're counting your waves correctly by the measurements. So let's get this out of here real quick. We have our first three moves, A, B, C. I've said this a couple times. That's a zigzag. Now, I've also said three patterns I want everybody to realize: the zigzag, the triangle, and the expanded flat. Now, there's regular flats and irregular flats and all that go with Elliott wave, but I've just focused primarily on the expanded flat. Okay. Now, the triangle pattern. We've seen it a couple times already. What if, I thought I had it labeled over here. Let me zoom out real quick. Okay. I lost my labeling. That's all right. Oops. All right. So we've seen triangles pop up 2 times already. Now, triangles can only form in the second leg, in the B wave. Okay. So what we've seen so far is triangles here, triangles leading into this move. And honestly, this looks like the beginning of a triangle. Well, the end of a triangle, really. So this would be on a lower degree. I'm just going to duplicate this. So this could be an A here, right? See where I'm going with this already? B here. And this is what we're waiting for here, is the E leg up. Now, I've already done this. I've already checked the symmetry. So what if, notice that if you draw these trend lines, you can't really get it accurate enough. So like to forecast the last leg. So you can kind of see this imaginary line, actually the 55-day moving average. If you straighten that line out, it kind of shows where the E might end up at. Okay, so that's one good thing about moving averages, but it's so wavy maybe it's not that accurate, but it gives you a good indication of where the general location might be. But let's do this. Let's just duplicate this trend line, the trajectory of it. Let's put it right here. Extend it to the right. It's almost a perfect match. These two and these two. And it's, it's really it's three moves. It's the E, C, and A. They all touch. So it's a possibility that maybe the E comes up to there to complete our B wave, and then we might head down. So let's and notice on the 4-hour time frame, we're pretty darn close to this 233-day moving average. I don't like to use it, but it's there. So let's go back to, let me see if I missed anything. Oh, just on a side note, here's a picture of an expanding flat, how it works, and how the old Elliott wave theory counts expanding flats in 335, but I counted in a 333. With this third move, it really has an extended wave based upon the fibs, the retracement percentages, and or has a lower, or has a lower degree expanding flat, right? So focus on this orange line here. Here's your A. B makes a higher price than starting A, and then the C leg expands past the origin where the B turns, right? So that's an expanding flat, right? Expands outward. Well, on this last leg, the C leg, you got 3 moves, 1, 2, 3, and then on the third move, look what happens with an expanding flat for a turn. I've seen it over and over and over, and most Elliott wave forecast analysis, they'll count, and you see these white lines, they're the subdivision. So 1, 2, 3, or an A, B, C for an A, B, C for a B, and then an A, B, C for a C. But in the Elliott wave forecast that's been around for forever, they'll count this C leg in not A, B, C, but a 1, 2, 3, 4, 5. So you'll see 1, 2, 3, 4, 5. But really, this is just part of another correction. I hope that makes sense. I hope you can see that. But again, I just can't emphasize this expanded flat enough. It's emphasize it enough. It's just because it's an important part of pivots and turns in momentum direction. But anyways, let's just let's go back here to where we started now. Okay, these are back to our MACD RSI indicators. Now, we indicated everything is bearish on the RSI and the 2 lines, MACD 2 lines. Now, not enough information to go as far as it crossing, because on these lines you always for crossovers, it's the short-term trend against a long-term trend. Those are what turns the market, momentum trends. So that's what you look for here, and that's what you look for on moving averages, crossovers, short-term trend against the long-term trend. Now, again, this is what I wanted to point out though on the indicators, is the divergence pattern. The MACD, I indicated it earlier with this line here. We're making higher lows on the momentum bars, but flat on the price. On the MACD, the 2 lines here, it's almost a straight line down with price flat. That's a divergence the other way, okay? But yet, still a divergence. Divergence means a reverse in trend. Now, the only thing that is consistent with the price movement is the RSI. Typically, triangle patterns will mimic, or the indicators will mimic the price action of the triangle. So you see an A, B, I labeled it out earlier in A, B, C, D, E, right? A, B, C, D, looking for an E wave up. If you go to the RSI, A, B, C, D, looking for an E wave up. Now, sometimes indicators for me will bear more weight than others. Sometimes I have to put more emphasis on the RSI. Sometimes I have to put more emphasis on the MACD. Okay, and then sometimes the two lines, but that's rare. But it just depends on how price moves. I don't want to get into it. I just want to say that sometimes one is more overbearing as far as a sentiment value than the other. So right now, because this RSI mimics price action, it leads me to believe that I think we're coming up for an E leg to finish this triangle. So that's pretty much it. I think that now, okay, we can do this. We can say because these triangle patterns that we've had in the past, you've had these false breakouts, right? So we could try to measure those. Remember, if you want to measure three moves, you want to find the C leg, measure the A. So let's start with this B wave here, A, B, C. We're going to measure this. It landed on the purple one, which is a 161.8. So let's do this. 1, 2, 3, A. It's probably your B, maybe. Let's do the first one. Looks like 2 degrees right here. No, I didn't do this before, so give me 1 second here. We're almost done. Okay, 161's way down here. Let's do it off the close. Okay, I'm really looking for this one to be 161, but it's the 200. So I'm not going to waste a lot of time with that. I'll come back to it if I see anything. I'll put a post out for that. But let's do this real quick. Let's just say the E leg. Let's try to eyeball it. Let's say it ends right here. We've already got our wave there on the high of A. Let's go to the low of A. There's your breakouts. I'm just trying to see if they mirror a little bit of this on a smaller degree or this one. But know this, they always came back to retest it. So these could be our target. So let's get some targets. I think that's what's going to happen. I think we could be moving up, and your indicators are going to give you a divergence on Monday. So is what I would do. Well, first of all, I'd wait, because it looks like here's the 161.8. So if this is 2 degrees here, 1, 2, 3, and then 1, 2, 3 to finish this out, I bet you we try to hit a 57.81, something like that. Okay, I'll leave that up there. 50. This box will pop up 161.8 at 57.81. If that hits, I would be expecting a bull run up to the 59.60 area. Okay, another number would be, let's see here, let's do this. Let's get a 50% here. That's still 59.65. So 59.60 area. Let's put a zone there, a block. Target for bulls target for bears. That's your zone. And then one last thing I want to point out. Here's going back to the daily time frame. Remember, I said this is an A down in yellow, B up in yellow, looking for a C down. This is an expanding flat that I'm predicting. Don't know if it's going to happen. We have to watch the internals. So let me just show you one more time the expanded flat. A, B, C. See how it lower here, higher here from the entry an A. So it's kind of it's actually the opposite direction of what I'm about to show you. So let's go to the daily. Still gets it? I think it does. All right. Yep. This arrow right here. Watch this. I'm assuming this is an A and a B up and a C in a bigger degree. Let's just measure it real quick. Boom. 161.8 at the 56.49. That's pretty significant. I had about 2 or 3 other fibs that overlapped that same point of reference, and whenever you have 2 fibs overlap, that's usually something to look at. So I'm going to wrap it up here. I hope that helps, and I'm going to come back with some time well, you know what, I'll do that real quick too, and then we'll pull it off. So this is a Fibonacci time series, starting on the arrow right here. Every time you see a blue line, it's a retracement. It's a pullback in the market. Okay, so Fibonacci sequence numbers, again, they are posted on the website if you don't know them, but it's just Fibonacci sequence. So every time you see a little blue line, there's a little pullback in the market. Okay, or change in trend, I should say. Okay. It may be off a couple of days, but like I said, on this indicator, I always use it on the daily only. And I think I said the 89th day was February 5th. This blue line lands on February 11th. So something to look at. I'm thinking if price starts to come down in somewhere around the week of the February 5th, we need to be looking for some kind of entries, maybe long. Now, if it goes higher, if we're getting an expanded flat turn for this final leg C, we turn up higher, then yeah, maybe a short position. But February 5th, the week of February 5th, something's going to happen. And I'll tell you, I can't stress enough that Elliott wave, that's forecasting. And with Elliott wave, that's what it does. It predicts that, I don't focus too much on fundamentals because Elliott wave predicts the fundamental. It doesn't, that's what its job is supposed to do. And, when, I say February 5th, something's going to happen. I don't know what it could be, but I'll be watching the news, but I'm not going to implement that noise into this channel. I just wanted to say that I didn't want to stress it because, like I said, this is just market analysis. This is just chart setup and structures. So, I don't want to tell people not to watch the news, but yeah, you can see how it can be biased sometimes. Trading is hard enough, so sometimes just trying to exclude the noise helps. But anyways, I'll leave it at that. And again, hope it helps. And I'm trying to get this website set up right now. Everything's free, but there's not a lot on there. But if you ever have a chart that you want me to look at, analyze, there's a section on the website. I guess I can go there now. And I think it's under memberships. and then you just scroll down to the bottom there, if I can get it to work, and you can just put in that's not it. I don't know why it's not working. Let me close some of these apps. There we go. Okay, it says only $10 per month, but I don't have anything up. But it just lists some of the things that I'm trying to get promoted, and but yeah, you can just put it in, whatever you want me to call you, email, your chart, and then if you have an indicator that you prefer, that you use a lot, I can implement that in my Fibonacci sequence, and see how I would use it, and see if it's relative enough for my counts, and if it helps you, it helps, and go from there. But I'm not gonna do all, some indicators I'm not going to try to learn, but yeah, we can give it a shot, see what happens. But everything is free right now. I do have a lot of donation buttons on this website all over the place. If the charts help you, if the video's been helping you, you can come to the website and give a little bit. And definitely, if you want a chart looked at, I will get to you as soon as I can. But appreciate you watching.